Hi, thanks for joining me in my market report. My name is Mike, and the market report is on mortgage rates. We get into what's impacting mortgage rates on a daily basis, whether if it's economic data that's released, or headline news, or some geopolitical, or sometimes simply the sentiment changed the market, and sometimes good news is bad news, and vice versa. And we kind of try to get that information out to you. So if you're in the market for refinance or purchase, you might be looking at rates and want an idea which way they're going. And if you're in the process of maybe getting into a transaction, you may want to know if you should hold off on locking your rate or maybe locking your rate as soon as possible. And hopefully these videos will give you a little bit more insight and give you a little bit more informed decision before you make that final decision with the loan officer. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you guys out. If you guys would love to earn your business, whether if you're looking to refinance or purchase, we're here. We'd love to be able to earn that business. So please reach out in regards to that. But even so, if you guys get questions about things, whether if it's the real estate process, mortgage rates, or different loan programs out there, we're here to help you guys out as well. So without further ado, let's jump into this my video. I'm going to go to a different screen today because my economic calendar doesn't really have much on this one here, but I got a different screen with more data, which I think is a little bit more important. So I'd like to kind of go over that with you guys. And today is actually a pretty big day in terms of economic data, which is the CPI report. We'll touch on that. But today is also a rollover day, which means that on a monthly basis around this time period, is that mortgage-backed securities, they go on a 30-day basis and they repackage them and they sell them on Wall Street. So the new dates that will be beginning here will be November's here, where the other last one was October's dates. So every 30 days, that's why we have these 30-day locks. They package them and resell them on Wall Street. Now on the calendar, on the graph, sometimes it looks like we had a huge loss. But all it is it's a reset in pricing, and it doesn't affect the mortgage rates. So just kind of give you an idea when you look at the MBS chart shortly. We'll touch on that, but in any case, uh, that will kind of give you some explanation on that. Now we'll start off with the. We don't really touch base on this, but if you look at the every Wednesday we get the mortgage backs MBA release their mortgage application activity report. Excuse me, sorry about that. And basically what that tells you is they break it down in the refinance as also the purchase side. Now the purchase side, as you may see, it did increase from one week over the next, and the refinance dropped a little bit as rates rose a bit. The refinance numbers went down. So let's move on. We'll start with the big one this week. We had the CPI, which is the consumer inflation data. It's not the Fed's favorite gauge, but a lot of people do like this number or like this gauge, this index for its gauge on inflation here. So the previous month, back in August, had a month over month of 0.3% increase. Forecast was supposed to keep that same pace of 0.3%, and it rose 0.4%. Now its year-over-year increase from 5.3% in August, which was had a forecast also at 5.3, but exceeded that to 5.4%. So we could see that food and energy did increase in this period, which we'll see by looking at the core CPI. The core is when you remove food and energy from the equation, which are a little volatile and gives us more of a basis to work with. Now, the core back in August rose only 0.1% and came in at forecast at 0.2% month over month. However, its year over year remained unchanged from at 4% here. So this is why we could easily say that food and energy is clearly the driving forces. And of course, if you've been to the gas pumps or even at the grocery stores, we see those prices continuing to rise. Uh, so we can see that firsthand here as consumers here. And earlier today, we had the 30-year bond auction, which actually went well and is actually helping out mortgage rates a little bit today, too. We had the 10-year yesterday, which did improve the market, which we'll show here shortly. So here we end up closing up 11 basis points, and that helped out the markets today. As you can see here, we kind of had some uncertainty going back and forth with the inflation data, kind of went down further. However, it did improve, and it continued to improve with the 30-year auction. Right now, we're up 13 basis points. So We're seeing a little bit better pricing today than what we saw at this time yesterday, which is obviously good news for those who are in the market to refinance or purchase. So we're hoping to get back into a much better level here. And so we'll take this out here so you can get a better look at it here, so you get see the views here. Now again, this would be offset a little bit because this would actually probably be up a little bit higher, but due to the rollover and the chart, it looks like it lost. We're down than where we should be. All right, so hopefully that makes sense here. One day or just today, here's the volatility of it. You can see the volatility where it was up, came down a little bit, and now it's been kind of this same range here for past couple hours here, probably about 2 hours here, in the same range here. All right, so let's go ahead and take a look here at the yields. Sorry about that. Just trying to get this back into the same level here. And then we got the 15 years at 2.6 now. That's gone up on the 15-year national average, and the 30 years gone up to 3.2%. Now these are again national averages. They do usually have some points built in there, so just be aware when you get these rate quotes. Sometimes there's points built in. So if you talk to a loan officer, get a rate quote, kind of find out what the cost is behind that. If there's a lender credit, if there's a purchasing in there. So anywho, I hope today's video helps you guys out. And we did get some good news here. Obviously, we're starting to see a little bit of a turnaround especially after the week or so. We had some pretty bad drops there, and this week we're starting to see some improvement, which is good news for us. Now, if you guys like these videos, please smash that like button and follow us. We greatly appreciate you guys. Again, feel free to reach out if you guys have any questions, or we can assist you guys on any of your mortgage needs or real estate needs. We're here to help you guys. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Bye-bye.